Next target 32K, and then of course my levels further up about 35, 36. And then the key one here, this is that monthly swing top.
Hello, everyone. Whether you're a seasoned trader or just starting your investment journey, Jason Pizzino's discussions provide a comprehensive understanding of market trends, charts, and indicators. His ability to break down complex concepts into digestible insights ensures that you stay ahead of the curve and make well-informed decisions. In this video, Jason Pizzino shares his thesis on the latest Bitcoin price trends after BlackRock's Bitcoin ETF application surfaced to the mainstream media. If you're eager to unlock the secrets of financial prosperity and stay ahead of the game, you've come to the right place. Our channel is your ultimate destination for all things crypto, Bitcoin, and stocks. From in-depth analysis and expert insights to market trends and investment strategies, we've got you covered. Bitcoin BTC $30,080 lingered near $30,000 on June 22 as traders sought opportunities to buy the dip. Data from Cointelegraph Markets Pro and TradingView showed BTC/USD volatility calming overnight after rapid gains. BTC price performance had impressed the day before, with the largest cryptocurrency returning to the $30,000 mark for the first time since mid-April. Now, hopes were increasing over a modest correction next, enabling lucrative entry points for further long positions. Bitcoin looking at this scenario, Michael Van de Poppy, founder and CEO of trading firm 8, told Twitter followers, "I think $28.05 is a great spot for longing. The lower the better, but I think that's the zone where you want to get it before we'll continue to $40,000.
I listened to a Twitter space with big crypto names, not going to mention whom, that's fine. They're already talking about the next bull run will be different than before due to BlackRock, more ETFs, etc. They are already on it, man. People never learn. Thanks for the video. So this is exactly what we'll be looking for in this next stage of the bull market. And it takes time. I've got a pretty decent chart to show you that I'm still working on, but it takes a lot of time to build that narrative. And then once the narrative is there, it doesn't last very long. So I just want you guys, I'm sure you'll remember this, that this time will never be different. It'll never be different no matter who's in the space, no matter how many different things are happening, the cycle will always repeat. Okay, so as long as you know that early on. So to the analysis for today, yeah, well, I mean, the market's up considerably, 6%, and we peaked out at about $30,800 depending on the exchange. And right now, as I'm filming this, it's up again. We're still pushing higher in the early hours of the next trading day. So that was where yesterday's video was, and we're up again. And of course, this is bringing a lot of new people to the market, and it's potentially bringing a lot of new people to my channel, which is why I said at the beginning, I feel like it's my responsibility just to explain or elaborate a little bit when I put out content, when I'm doing my analysis, when I'm giving you information which you should go away and do your own research on, that eventually I'll start to get quite fearful. In the short term, sure, this can be slightly fearful now. It's a short-term move. And I pointed out in this particular thread here on Twitter earlier that I'm not a perma bull and I will change my mind, but it'll happen in increments. I'm not going to all of a sudden flip. It'll happen. I'll go from bull to less bullish to less bullish to a little bit more fearful. Start to turn a bit bearish, and then you start to get the fall from that point. And then you get some of those indicators that tell you, well, things are probably over. But I think that's a long way off. I think that's another 1, 2 years, possibly a little bit more than that. In the short term, we can have shorter term views that the market is going to correct. And so all I wanted to point out with this particular chart here is that I'm not a perma bull. I'm just an unemotional professional trader, which means I understand that as fast as the bullish narratives come, and that's why I pointed out this particular comment first up, everyone's getting on board with these massive bullish narratives, they can disappear, or it can just go silent and drift off into yet another lull in the market. And I'm basically just pointing out the pumps that we had through 2019 and 2020 before we took off. We had 36%, we had 44%, we had 63%, we had 170%. Obviously, that was on the back of the COVID drop there. We had another 41.5% before we had the pullback and then the takeoff. And remember, this spanned over the course of, well over 12 months. You can see right there at the bottom. So within that, we had good news, and then it faded for a few months, and then a quick little capitulation. We had some other news here. This was, of course, at the end of the pump to 14K, and then we faded for a bit, and then we got a capitulation. And then we're about to try and build back. Well, we had a final capitulation here from the C-19 pandemic, and we bounced back pretty good. We bounced back here, and we only just faded out. This was a very, very boring time in the market, May through to the move up in July, and then it went boring again. Nice little quick capitulation, a lot of uncertainty here, and we started to move away from that point. So even though we've had all of this great news from BlackRock and from Citadel and Fidelity and Charles Schwab opening up exchanges, you name it, there's some sort of bullish narrative going on, which is why it continues to pump on these news events, which tells us we're in a bull market now. Well, we knew that all along, but essentially it's pumping on the news. But if we don't get a news piece the next day or the day after, anticipate the market just going dead for a bit, maybe going sideways, maybe falling a little bit here. But I'm not saying that has to happen exactly from this point. There could be a little bit more in it that pushes us past this high. That's going to be great things. It's really just be prepared for things to go dead again after such positive news. And if we get a dip, a good dip, look at what a good dip is, not just this little piece of crap, 0.5% day down or 2.88%. You get a nice, reasonable dip in the market, 12%, 13%, and sure, it goes lower. That's not the point, remember? The point is buy low, sell high. It's not buy the bottom, sell the top. It's just buy low and then sell high. That's it. Okay, so you might be buying low here. Oh, okay, it goes a little bit lower. But the main thing is we're in a macro uptrend. So we want to buy significant dips in a macro uptrend and then sell significant rips in a macro downtrend. So we're in a macro uptrend at the moment. To my own degree, that we're in a macro bull market. I hope you've done the same. And therefore, that allows me to buy up at lower prices rather than like your other analysts who are all waiting for these higher price targets to be hit. Speaking of higher price targets, we will have some resistance overhead. You can see the rejection here, or this, the rejection on the way down in May, June, that was around 32K. So we're getting a little bit close to that now, 30.5. Obviously, we have the 31K. That's right there. We also have a 50% level from the top. Remember the top 69,000? So half of 69 is 34,500. Look out for that number. 34,500 comes in at around this level, which is also at that low there in February, which was the Russia war. Remember that. I'm always remembering where these news events occurred and what they look like on the chart, because we've wiped out all of the news events to the downside here. Remember, this was the SEC lawsuit, and there were other things going on here, banking crisis back here. No one cares about those anymore. At least smart investors don't care about them anymore, because they're telling you, they've told you the price has gone up from that point and surpassed the price of where it was at that time. So that's where we're at with BTC. Next target, 32K. And then, of course, my levels further up about 35, 36. And then the key one here, this is that monthly swing top, the lower swing top before the market really collapsed from that point. That's at around 48,000. So I'm looking forward to that. In amongst that, yes, I've said before, we have other levels. There's somewhere around a 42,800, I remember, is another 50%. Don't worry, we'll continue to follow that up on the channel as well. Essentially, this is what happens at the bottoms. Not sure if bear is over. Does that sound familiar? Is that what we're seeing at these times of the lows? Not sure if the bear market's over. Or let me see, I could go lower. Oh, I bet you it's going to retest 24,800. That's the comments that come through. It's going to hit that next low again. It's like, no, it's not. No, it's not. You had your opportunity and you missed it. The markets don't necessarily give you those opportunities all that often to get back in at those lower prices. That's the market. If it was the case, then it's probably going to go lower than those prices. Obviously, I could be wrong. I'm just playing probabilities here. So yeah, people are like, you just wait till the end of the year, we're going to go back under 20. Okay, maybe it does. I'm not trying to have so much of a go at those people. But anyway, I'm not betting on that fact, because I've seen it far too many times that it doesn't necessarily go back to that. unless you get a massive black swan event, because otherwise you're going to be buying higher and higher and higher. That's just the way it is. So it's okay to do that, especially if your outlook is higher. But as we get higher, this is where you should be fearful. Whereas the masses, what happens every single time, even on the short-term timeframes like what's happening right now, is the bull market's back on. Let's load up. I'm going to load up before I miss out. And that's pretty much the greed. You can see it in the chart of how quick these moves happen, which is why I'm saying it's probably happening here so quickly at the moment. This was yesterday, remember, so the actual bar's well up here now. But you can see it. It even happened recently when it bounced out of that the banking crisis low. And then it went nowhere. It really did go nowhere. The emotions went everywhere, even though they're small moves, but the price really did go nowhere from the top of that. Same sort of thing when we got out of the bottom accumulation area. Okay, so this is the way we should be trading the market. That's the way most new investors trade the market. And because they come in late, they don't remember what this emotion was like at the bottom, but you guys have that privilege to remember it, and you've gone through the school of hard knocks to remain in the market through this period. This red triangle essentially is just how you should be not loading up on your assets. So what people do is, I'll buy a little bit just in case at the bottoms, a little bit, and then they buy a lot at the tops. So really, that's my mistake. This triangle should be the other way around. It should be like that. So my error there. I'll redo this chart one day. That's the way you should be pyramiding. A lot at the bottom when you're unsure, but we should really be confident, and then basically scaling out on the way up. Doesn't matter if you don't get the top, you've made a nice profit. The people who are at the top here buying at the top, they haven't made any profits. They call you an idiot for for selling at those higher prices. That's all there is to it.
Analyzing the nature of the past day's upside. Meanwhile, on-chain analytics firm Glassnode argued that Bitcoin was doing nothing out of the ordinary. Volatility had followed an extended period of sideways BTC price action, which has been familiar to many other breakouts. Join us on this exhilarating adventure towards financial growth and success. Don't miss out. Subscribe, like, and share today. Thanks.